to make it easier for buyers to buy houses, to make it more valuable for people on a monthly basis, and make it easier for our lenders, including our favorite lender. I'm Bill Gross. I'm a real estate broker in Los Angeles. I'm here with my colleague, Patricia Castillo.
Patricia Castillo, Los Angeles.
Yeah, it's Patricia Castillo in Gringo, or it's Patricia Castillo. You speak Spanish. And our good friend,
Gustavo Segura, mortgage broker.
And we're here every week on Wednesdays at 5 p.m., our home buyer seminar, 5 p.m. Pacific, 8 p.m. Eastern. We record it and live stream it. I was just chatting a little bit with Gustavo before we started about the interest rates. I'll come back down again. So Gustavo, what's going on with those interest rates, man?
Yeah, so last week we had inflation, right? That was a good jumping off point to keep the rates coming down a little bit more. And then today, unfortunately, one of those things that retail sales are weaker. People are, companies, I think Microsoft was one of the big ones that I heard on the news. They're laying off a lot of people. I think last week or so, I heard Salesforce as well was laying off people. So unfortunately, those are bad news that are good news for the rate, So we'll see better rates as we keep going, I think, over the next couple of months. But right now I'm quoting people, and I've got like an FHA very close to 5%, like 5.1, unconventional staying below 6%. So I think there's a lot of good news that could be had here for people that are starting to buy.
Nice.
Yeah.
And so just take a look at a chart from January 1st. The blue line covers the current market rates, and you can just see it's just been nice, down about 0.5%, a little over 0.5% since the beginning.
You're not sharing your screen.
Yeah.
Oh, I'm sharing the wrong program.
Yeah.
Hold on 1 second here. I'm sharing it.
Yeah, back in October, October 20th was when the rates were the highest at 7.37. And so now we're 3 months, just about 3 months later, and rates are at 6.04 for a 30-year fixed.
Yeah.
You can see how much they've come down. So it's really been a nice benefit for buyers. I think that at the time that rates went up, I think a lot of buyers assumed rates will continue to go up, and as a result got out of the market. And that right now there are buyers who are recognizing that they've come back down a little bit. I got to tell you, I have buyers who got overbid a couple of properties last week, and I have as a seller a couple offers on properties. So I can see there's more activity than you would think. Of course, Los Angeles is a different market than other places in the country, but the market is pretty healthy by any standards, I think, huh?
Yeah. I think now we just have to look at inventory, right?
Well, that's the challenge. On one hand, it's a little better than last year. It's not as good as it was in a normal year. So that's the challenge. On the flip side, buyers have a little more time because there's a little less competition, and now the rates have come down a little bit. So you got to, play the cards you're dealt, not the cards you like to have. And that's the market we're in right now.
Yeah, exactly.
And some markets are still hotter than others. So, for example, I was talking to another agent recently, and a property that her buyer was interested in LA, they had multiple offers, and they were still looking for the highest offer. So not just the terms, right? Because of course the terms matter too, but they were already 15,000 over, the list price. So in some areas, we're still seeing where there are multiple offers and the price may still go over what the list price is showing. So right now it looks like it is, there is an uptick right now. I know my phone's been ringing more lately, and especially with the rates coming down a little bit more in the almost 6% range, it's definitely prompting that buyer bounce back from the ending of last year. It was still kind of a little busy, but not as much because people were kind of holding off and, seeing if the rates were going to come down. And of course, now they have. So I actually have a few appointments set up this week for buyers that I was working with last year, and now they're, re-entering the market and seeing what we can do to get them pre-qualified.
So prices have gone up since a year ago, and rates have gone up since a year ago, but there's a little less competition, a little more chance to look. So I think the other part of the reality is there are people who are being laid off, the downside. There are businesses that are struggling, the downside. But then there's the upside. There are people who are doing really well. And those people doing really well, this is the market for them, right?
Absolutely. Yeah. There's a lot of opportunity right now, especially with, I think we touched on this last week, where we're seeing a lot of concessions for buyers happening right now. And I think that's really the exciting part, because some of my clients that I'm reconnecting with, they're not aware of what's going on right now in the market. So just being able to deliver this news, it's really exciting for me and for them, because I'm like, hey, this is what we can do for you right now, which wasn't really around or existing last year. So there's a lot of new opportunity right now if you're serious, if you're serious and you're really looking to make that move.
And there's also probably a little bit of a timing of how long the seller concessions are going to be around. Is that another month? As more people come into it, there's going to be those individuals, those buyers that don't need the seller concession to help with closing costs. So more people are coming in. Those are not going to be around as much. We'll still take them and help them if they get it, but the seller is not going to be offering those seller concessions because they're going to have more of those offers.
Same with FHA loans, right? Last year, FHA was a dirty word as a listing agent. I would just say, thank you, but no thank you, right? And now it's like, well, if it's FHA, if the price is right, let's talk about it. But you have to know FHA guidelines. You got to know what kind of properties qualify, what doesn't, ins, outs, fix-ups, all that kind of stuff. This is your chance. If you're an FHA buyer, this is the chance you've been waiting for to jump in. And now the rates have come down a little bit to help you as well. So what's the 30-year fix for an FHA loan today, Gustavo?
So if they have good credit, anything over a 720, 730, I'm getting very close to 5%, and that's without any points. Yeah, that's without any points. I'm finding wholesale lenders that can do that. And like I said, if they want to if they can get a seller concession, then that means that we can put them under 4% easily. Even if they want to pay $1,500 or $2,000 to bring the rate down, that's bringing them down below 4%. Very easy. Nice. Yeah.
Look at that. You said easy twice. Did you hear that, Patricia? I heard easy twice. Lenders don't usually say easy. You never hear it's never easy. It won't be easy. You said easy twice in one sentence.
To bring down the rate.
No, you said easy. No. Yeah. You said it's easy. It means the whole loan's easy.
No. I haven't been able to say that in like 7 months,
Look, he's laughing too. It's been a tough, been a grind the last 6 months. It's a little easier. We're all breathing a little easier. I just put a deal in the escrow today myself on a kind of complicated land deal, but still, it's my 5th pending escrow going on right now. So, there is energy in the marketplace. I don't think it's like it was 2 years ago, but certainly the gloom and doom of 3 months ago is kind of passing, and now we're getting back into buying season, I think.
Yeah. And I think it's still important to really look at how much house you need and really what you're comfortable paying, because just because the rates are coming down, maybe you qualify, that's going to directly increase your purchasing power, but you also don't want to overextend yourself on the amount that you're going to be paying monthly. So I think it's still important to look at what your monthly budget is and maybe factor in a few things. If it's seasonal where you get overtime or you get bonuses at your employer, those are things that maybe, could be factored into your pre-approval. But also you don't want to necessarily rely on that all the time, because what if you don't have overtime this one coming year? You don't want to be dependent on that. So I think it's important to still look at your monthly budget and really get comfortable with the payment that you think you can afford, which will, translate into your purchase price.
Yeah. Especially too, when I have conversations with first-time home buyers, and I just recently had one with 2 of them. They're not married yet. But I tell them, I go, look, this is what your cost is going to be, your monthly. Now you're going to be paying property taxes. You're going to be paying those home insurance. Or do you guys want to go out? Do you guys, do you still want to go to the movies, dinner? Those are the kind of things that you want to make sure you think about in your budget for. Sure, I want to get you to the max loan amount, but is that really good for you? We also have a responsibility to just make sure that they're aware of the full scenario, of the income that we're using. We always start out with gross. That's not what you take home. So I want to make sure that they understand what they're getting into as well.
There's gross pay and net pay. I'm the bigger ones, the gross pay. Very good. Most common question first-time home buyers ask is, how much do I have to put down on a house?
That's right.
How do you answer that question? Patricia, how do you answer the question? How much do I have to put down if I want to buy a house?
Well, the first thing I say is it depends on the type of loan you're getting, right? Because if you're you can put down any, lower than 20% on a conventional. Then I go into the PMI scenario because anything below 20% conventional will include PMI. It won't be as high as FHA, but it just depends on what that scenario looks like. So, I don't want to give them a real ballpark number, but because we don't know what type of financing they're going to get. So, and depending on the purchase price, because obviously it's dependent on the purchase price. So once we get into more discussion about their income, what kind of loan might be most suitable for them, then we can give them, or I can give them more of a quick, ballpark figure. And then also include maybe another 8,000 to 10,000 in closing costs, because although a lot of sellers are providing those concessions right now to buyers, that doesn't necessarily mean that you're guaranteed to get that on your purchase. So it's always good to have at least 8,000 set aside from your, for your down payment. So like if you're doing an FHA loan, that's going to be 3.5%, depending on what the purchase price is. But I also remind people, aside from that, you want to have those funds readily available for those prior inspections that you're going to do the first week you open escrow, because that's the busiest time. Once you open, you have your general home inspection. Then you have, your termite inspection. If you're going to do a sewer scope inspection or a roof certification, there's some inspections that may lead to more inspections. And you may be $1,000 in with different inspections that you're doing. So those are important details to consider as well, because you want to make sure that you have that money in your account, especially if you're getting a gift from a family member or somebody's gifting you money for a down payment. You may not have that money in your account at that moment. And so it's important to just know you're going to have those upfront costs before you're even sending in that final down payment.
Very good.
Yeah.
Gustavo, so when people may ask you, what's the minimum down payment I need, what would you tell them?
Yeah, and so for me, I start out on the most positive news, which is it could be as little as 0%. If you are a VA veteran, right? If you're in the military, I said, so this is where I jump into is it could be as little as 0, but let's talk about your special situation, right? Are you a veteran? Do you have good credit? And as Patricia said, maybe we need to go down a conventional loan or an FHA loan. And then at that point, it starts to switch around, how much money they have to put down. It's very similar to when someone asked me, what's your rates today? And I said, well, to give you a good exact rate, I have to ask you about 6 different questions, one of them being the down payment. What kind of loan we're going to get? Are you going to buy a manufactured home, a single family home, a condo, a multifamily? So there's a lot of different variables, right? So once I start, asking a couple more questions that allow me to identify what type of loan they're going to go down, then we can start looking at the down payment. But ultimately, what everybody also always looks at is their monthly payment. I always say, of course, naturally, 3% down for a conventional, but if you put 10 or 15 or 20, of course your payment is going to be less, and that's when they do some quick math and they're like, wait, if I do $800,000 home, 10%, that's 80,000. Okay, I don't have that. Okay, now we just kind of start working, with some good numbers.
Yeah, I wanted to share this really quick scenario because we were working on this I think it was last week, Gustavo and I. So I had a buyer. They make about $10,000 a month, and they have a $2,000 car payment. $2,000 a month car payment. So that
I'm sorry, that $2,000 a month house payment?
No, car payment, vehicle payment. Yeah. Their car payment is $2,000 a month.
Does that include insurance?
It probably doesn't.
That was just the car payment. So
yeah, something.
I mean, they make decent money. They own a business, right? But this is where it gets down to the meat and potatoes in the qualification, because they are paying themselves through their corporation. So they do have a W-2 as far as their earnings because they're getting paid from their own company. But because they are the principals of the company, Gustavo also has to look at the corporation's income. right? So it's not just the
W-2.
borrower or the buyer individual, but we also have to look at the status of the corporation and what their financial solvency is. So even though they're getting paid over $10,000 a month with a $2,000 car payment, adding up some of the other debt that they had, it was just the debt to ratio income just didn't work right now. So we have to wait until they pay down the car, or save up a larger down payment.
Yeah.
What kind of car do you get for $2,000 a month?
Time traveling car? I don't know.
I know, we didn't even go there. We were just shocked at the car payment.
Yeah.
I have a friend, and he really got himself in serious financial trouble. And he bought a really, really nice truck. Really nice, like F-250, all the upgrades, all the features. $1,000 a month plus insurance was $300 a month. And I think the purchase price, I think, was like $75,000 or $80,000 for the truck. It's fantastic. He can't afford it. You can't afford that payment. There's no way.
Yeah.
So I'd imagine $2,000 a month, either they got themselves in trouble and they're trying to bail out through that car, or that must be like a Ferrari or something, no?
Yeah, I don't know. But when we look at that scenario, you got $10,000 in W-2 income. Usually you're going to use somewhere around 40 to 42, 43% of that in order to qualify you. So that's about $4,300, real quick math. And if you're paying $2,000, you're taking away about 50% of your eligible income to qualify for a house. So that's where you have a depreciating asset. And, it would be a lot easier for them to, get rid of that car, buy the house, and then go back and get that car, because car loans are a lot easier than home loans. So that's where now you're changing into a home opportunity that will be appreciating over the years. So
my favorite car is paid for.
Yeah.
So wow, $2,000 a month. That's just, I was watching football this weekend, and they have commercials for cars, like the payment only $500 a month. I'm like, whoa, $500 a month. There was a time, I don't know, I'm older than you guys. There was a time that was a high payment.
Yeah.
Yeah.
I mean, I guess people now just have $500 a month car payments. I don't know. Maybe I'm old, but I don't like making payments.
So, that's where we start with, like you said, how much the down payment could be and their credit score. And then it's like their income. And then, they may say, oh, it's a $500 car payment. And then when I actually look at their credit report, it may be $700, so all those little things play into how much they can qualify. What's that debt ratio? Their credit score. Some people say, oh, I got a 700, and then once I look at it, it's 670. And lenders are very picky about, those FICO buckets. Once you go below 680, or once you go over 700 or 740, there's different levels. So, when I ask a buyer 6, 7, 8 questions, it really is to make sure that they can get off the phone with a good quote and not just me throwing some numbers at them, because that's what a lot of people will do. They'll say, oh, I can get you a 5%, but they didn't tell them that they would have to be charging 2 points for that, so.
Yeah, which is adding to their closing costs that they were probably expecting.
Right.
Exactly.
Unless you get the seller to pay for it. That's a strategy that we use nowadays more often than before, which is ask for that, concession, and then have the seller pay those 2 points. And it really does help the buyer get into a house that otherwise would be more difficult on a monthly basis. So, well, cool. Okay. So what's the open house activity like in Downey, the Beverly Hills of the 562? What's it like down there, Patricia? Are people looking at houses? Is football season and the cold weather keeping them away? What's going on for home buyers right now?
Yeah, there's going to be, it looks like there's going to be a couple open houses this weekend, and I was looking at the stats for this area in Downey, and the homes are still selling pretty quickly.
Mm-hmm.
So, it's a nice neighborhood. I feel like it's a very self-contained because there's car dealerships, there's medical buildings, banks. We have, Pilates, there's parks, there's walking trails. We have an award-winning school district here. And so it's just a really nice place to live. And I think that's why the homes are still holding their value, even though in some places we've seen some price reductions, maybe up to 5% in some areas. But, here the home values are holding pretty steady right now.
Nice. Well, that's certainly good to hear. It's interesting. The National Association of Realtors used to always publish every month foot traffic for how many people are going into open houses on a monthly basis. They stopped doing that in November because look, there's less shoppers. There's also less houses in inventory. The people who are out buying, though, for the most part, are more likely to buy houses that time of year. That's the positive of that. But I think sometimes the real estate organization doesn't want to say that, so they just stop sharing that information. But also with football season here in Los Angeles, the snow doesn't keep us out of houses, but there are people who just, the end of the year, their holidays, family time, things like that. So, but that's going to turn around because normally come the end of January, beginning of February, the market really starts to pick up. So hopefully we'll see some increased activity here, I think, in the long run. Another interesting statistic, I don't know if you guys ever see this before. Central Lock is, here in our marketer, we use Supra is the key that we tend to use for MLS. So there's really two competitors, kind of like Pepsi and Coke. There's Supra Lock, which is what I use. I think that's what you have, right, Patricia?
I have the Supra key.
Supra. So in other markets, they use Central Lock, which is like Coke and Pepsi. So in other areas, they have that. And if you take a look at the stats, they're really interesting. They do report on showings, and they show that regionally, showings are down year over year, 17%. This isn't a surprise. We know there's a few less buyers. Remember, last year we had so many buyers with multiple offers, 10 offers every property. So having traffic down 72% isn't a tragedy. It's probably good for buyers in some regard. But the Central Lock cars increased individual cards up 2%. It tells you the people who are out looking are actually out looking more often than they were otherwise. So I think that there's good and bad news in the marketplace. I'd say if you're a buyer and this is a good time for you to buy because you can afford to, it's a good time. There might be less traffic. That just means there's a little less competition, but it's still a little bit less from what was crazy a year ago to probably a healthier number today. So if you're looking to buy property, give Patricia a call. Get out there. Let's get the property seen. Get with Gustavo beforehand. Get yourself pre-qualified, and let's find what you're looking for. How's that sound, guys?
Yeah, that sounds great.
It does.
And I see Gwendolyn Cook is on the call today. So welcome to our call, Gwendolyn.
Hi, how are you?
I'm doing great. We're all doing great here. How are you doing?
Pretty good. I won't complain.
Where are you joining us from?
Huh?
What city are you joining us from?
From New Orleans.
Oh, okay. That's exciting.
New Orleans, isn't it? New Orleans. Hey, you guys having those? What are those cakes you guys have this time of year? You have those
Mardi Gras.
Mardi Gras, but you have those king cakes. You have me some king cakes?
Yeah. Yes.
A big deal down there.
Baby, I mean, you got to be the one to buy the next one.
So I guess you get like a dozen king cakes.
Inside.
Yeah, like a dozen cakes, and one has a baby. And if you get done with a baby, that means you have to buy the next round for everybody else.
Yeah.
Yeah, you guys are crazy.
You coming down for Mardi Gras?
No, I'm married. No.
No, you can bring her with you.
No, I cannot. Gwendolyn, I'm not getting divorced. It's not. You have to work a little harder to fool me. I'm not going down there. I would go in the entire state of Louisiana during Mardi Gras. No, that's not for me. When I was younger, I did, but not now. No.
Well, wait. I'm kind of confused when you say because you can bring her. So how would that have anything?
There you go.
You still being married.
Well, because I brought her, she'd see me getting into trouble. So maybe I'd lie to her and tell her I'm going somewhere else and go to Mardi Gras and try to get away with it. If I bring her with me, she's going to see what I do in Mardi Gras. That's no good at all. So no, that won't work. No, that won't. You even met my wife. That's not going to work at all.
He's still gonna get himself.
Not like you've been down here before.
I've been down there before, yeah.
Okay.
And yeah, no, I know though. I've been there. I have Mardi Gras. I'm done. I've grown up. I have gray hair now. I'm done with the Mardi Gras thing. So enjoy it though. I hope you guys have fun with it.
I won't be going. It's too much for me.
Oh, look at that. Too much for you, and you're already down there.
Yeah.
Okay.
No, I see it on. I'll just wave on TV.
Okay, very good.
It's not like it used to be.
It's not?
No, and then our streets kind of messed up. So, and then we don't have enough policemen. And so they got to reroute the route, and it's not going to be like it used to be.
Oh, wow. Okay.
Yeah, we got a lot going on with the crime and the youths, and it's really bad.
Really?
Yeah.
So
Okay, well,
maybe we can help you move to Downey, to
California.
Los Angeles.
there's not too many people moving to California to avoid crime problems. That's not usually why
It's not open?
people coming from Guatemala to avoid crime problems, but nobody's coming here from other U.S. states to avoid crime problems.
Hold on.
Okay, let's wrap up here. Patricia, last words here. What do you want to tell people as they wrap up for the week?
Yeah, I just wanted to, let everybody know. Thank you for watching today. If you guys have any questions, feel free to give me a call anytime.
Okay.
And Gwendolyn, if you have any questions as well, we can definitely help you. If you'd like to do just a one-on-one after the call, I'm happy to do that with you.
That's great.
So I'm at 323-365-9909.
Wait. I don't have a pen that right.
I'll put my information on the chat as well. I don't know if you can see the little chat box we have here.
Okay, and look at my number 504-366-4247.
And you're in New Orleans.
Hair.
Okay.
Fantastic.
I have you in my email, Gwendolyn, as well.
Okay.
Mhm.
And Gustavo, last words for our
Yeah.
getting ready to get in the market here. How we can get them over the finish line?
Yeah, I think the first thing is knowing exactly what you can afford, being able to review with someone like myself, being able to take a look at what's on your credit, what your credit score is at, and then your income, and then being able to be ready to go out there and shop around. That way you can communicate with someone like Patricia and be like, hey, I'm pre-approved, I'm ready to go, this is how much. And you can be very focused and specific in what you're looking for and not just go out house hunting and then you realize that you can't afford it,
Right.
So I think really knowing your finances and getting pre-approved.
Yes.
Most important thing, most important step, figure out a game plan financially before you start the process. Some people discover they can afford more than they thought. Other people, you get some work done beforehand to get the best deal, and you can negotiate the best deal in the world, but if you can't close on it, you're
Right.
not going to enjoy it. So definitely get with Gustavo, get with Patricia, and let's get this done ahead of time.
Yeah.
Okay, there we go. Hey, Gwendolyn popped in video
You can
wise.
see me now. Yeah, I was like,
Yeah.
wait, y'all can't see me?
Where's your king cake at? Let's see the king cake and the little baby.
No, I don't have it yet. Next time.
How about some of those? What do you call the jewelry? Have any of those
for
trinkets?
the Mardi Gras bead?
Yeah.
Yeah, but not here.
Something happened to you when you had them last year.
I'm at the
Okay.
salon.
Okay, well, very good. Hey, I'm Bill Gross. We do this home buyer seminar every Wednesday, 5 p.m. Pacific, 8 p.m. Eastern. We live stream it onto Facebook and YouTube. Reach out to Patricia, reach out to Gustavo or me if we can help you guys. And to Gwendolyn and everybody else, have a great Mardi Gras. And we'll talk to you guys soon.
Thank you, guys.
Bye.
Have a good one.
Okay,
Bye-bye.
bye-bye.